Hello everyone, welcome for this monthly update for June 2020. In today's episode we'll speak about three main things: the Wirecard scandal and what's going on with that. We're also going to speak about the boy who killed himself actually because of Robinhood, and also we're going to speak about the stocks that I bought and why did I bought them. So without any further ado, let's go into the video. Alright, so first of all, we're going to speak about Wirecard and what happened with this company, because if you're not aware of this, well, they actually lost in one day of trading 80% of the value. And guess what happened today? The exact same thing. They also lost 80% of the stock value in one day. So in 2 days, if you think about it, in just 2 days, they lost about 96-97% of everything, which is absolutely insane if you think about it. So you may be asking yourself, what happened with the company? How can you lose so much money in just 2 days of trading? Well, pretty much what happened is that the balance sheet went public, so they were showing what revenue they have, which kind of income, where the money was invested, and what they were doing with the money. And something strange happened. People were like, wait, there's a problem here. Where are those $2.1 billion? And guess what they answered? Well, they pretty much said, we don't really know, we lost it. So, how to say it correctly? Well, they pretty much lost more than $2 billion. So as soon as the news came out, people were freaking out, and you can understand this because it can be considered as fraud depending on what you did with this money. And you can see here on the article on the screen right now, Wirecard says 1.9 billion of cash is missing. Of course, that's in euros, so it's $2.1 billion in USD. What happened is that shares in Wirecard crashed more than 60% when auditors of the fintech group, which was once regarded as a star of the German tech sector, warned that 1.9 billion was missing from its account. And this was just the beginning, because at this point they just said this is missing from our balance sheet, we don't know where this money is. But nothing was 100% sure, and the company actually said that there was an explanation that was explaining pretty much what and where this money was. But of course, as I just told you, this is not what exactly happened. If we go to the second article right here, this is for today. So today the same thing happened. They lost about 80% of the value, even though they already lost more than 60%. So what happened is that they had to file forms for insolvency. Insolvency, if you don't know, is when a company is not able to pay money, either to investors or to pretty much anyone that owns shares of the company, and they just can't pay the money that they are owning to all those people. So when people started hearing about this, well, what they did is that they sold all the shares of the company, for the simple reason that if the company is not able to pay them back, they should actually sell this money so that they can actually take a little bit of this money back to them. That's exactly what happened. The price of the share actually went, for the first day of trading when they lost more than 60%, from about $110 to $17 and below. And today it went actually from around $17 to $12 to $3. So this is a massive drop for a share that was worth actually more than $100. If you think about it, this is absolutely huge. And this is just a message for every single investor out here. You're never really sure about what's going on and what's going to happen with the company, because if you don't know Wirecard, well, they are a leader when you speak about European payment method, just like MasterCard or Visa, if you think about it. And that's actually one of the biggest companies that Germany has for the tech sector. So when they dropped, this is actually a huge disappointment for the German government, and right now they're pretty much lost. They don't have this big leader into the tech sector that they can trust. But how can you actually avoid something like this? Well, it's pretty hard. You have to be really conscious about what is the company doing with the money. And actually what they did is that I think they had fake accounts in the Philippines, in which they had a lot of money that was supposed to be in here, but that they didn't really have. So you're never really sure if a company is actually using fraud to their benefits, and this is actually something that can happen to you. This is also why you should absolutely diversify your investments and not put everything into one share, because this can happen to you and then you lose all your money. So this is actually a really sad and really serious topic. We had a 20 years old that actually killed himself because of Robinhood. He was doing option trading, and when you don't know what option trading is, it's a way for you to invest more money that you actually have, and you can also use leverage, which makes the thing even harder and even more dangerous for someone. Now, when this young boy actually opened the Robinhood app, he saw on his account that he was owning to Robinhood $730,000, and as you can imagine, it was a big shock for him. He was not ready to see this, and he killed himself. So as you can see on the article on this page right here, the family of a 20-year-old student said he died by suicide after confusion over an apparent negative balance of $730,000 on his Robinhood account. Now they are demanding answers from the millennial-focused trading app. So as you can imagine, the story went pretty much all over the globe because this is something really serious to think about, especially for a 20 years old that doesn't really have that much money and that was just trying to invest and maybe to trade a little bit with it. And this is also a message for everyone that if you want to trade, if you want to use leverage, well, you have to be the most conscious person ever. And you should always use stop limits so that if you lose money, there is actually a point in which the money is stopping by itself and you're not losing everything and going into a negative balance. Because as we can see with this thing right here, he was not using a stop limit and it went over the limit and it went just crazy in negative. Now also, as you can see on the article right here, there is a confusion over a negative balance. Now as you can see on the article right here, someone said, how was a 20-year-old with no income able to get assigned almost $1 million worth of leverage? And that's a real question to ask yourself, because if you don't know what leverage is, pretty much is that you can multiply the money you're investing or pretty much you're trading with. So let's say you want to trade with $100, you can use a leverage of 10, which makes your money 10 times worth what it actually is. So you're trading with $1,000. But then imagine that you lose 1%. With a leverage of 10, you're actually losing 10% of this investment. And what this young man actually did is that he used almost $1 million worth of leverage, which means that even with a small loss, he actually lost a ton of money on this trade. Now Robinhood is aware of this and they actually sent a letter to the family to apologize and said that they were going to improve the app so that this kind of problem don't happen again. Because the problem right here is that Robinhood was actually showing negative $730,000 into this guy's account, but what really happened is that half of his trades were not even in the market yet, so this was not representative of the money he was actually owning to Robinhood. And if you're not aware of that, well, you can interpret those numbers in a false way, and that's exactly what he did. He saw negative $730,000 and he just lost his mind when actually he was missing way less than this actual number. Now, if you guys are interested into trading, I would suggest that you do a lot of research and actually that you use maybe a demo account in which you can't lose real money so that you don't have this kind of problem, because this is a real problem for a lot of people that are not aware of the problem of leverage and the problem of trading. So if you are in this case, you want to maybe start trading a little bit and use leverage, well, you need to work on this. Use a free account and a fake money account so that you can actually trade with, get used to it, and maybe later when you are really used to it, start trading for real. Now let's go to something a little bit happier. As you can see on the graph here, this month I got paid about $12.15 in dividend, which is the highest month yet. And we are on the 25th of June, so we still have a few days to go, and I believe I will get paid a few dividends still, so it will probably increase by the end of the month. This month I will not actually be able to show you my portfolio because I don't have the API key to have all the informations of the share that I own. So let's jump into the stocks that I bought this month. All of the stocks that I bought this month were actually into this video right here that I made a week ago. That's about the 5 stocks that you should buy in July 2020. So let's go and watch which one did I purchase. Let's start with Waste Management. As you can see here, and if you don't know Waste Management, well, first of all, it's the waste company. They take care of waste, and it's a huge, absolutely huge company that's taking care of most of the waste management in the whole in the USA. So as you can see, the price right now is about $101. I actually bought them for $105, I believe, which made me a little lost, but I'm not aiming for the short term. So as you can see, this company over the long term is growing quite a bit, and this was when the coronavirus situation appeared. And right now we are at a pretty fair price, I believe, for this company that is really strong and had a lot of potential in the future, where they will expand to new areas into the US and open new waste management centers. So that's a great company. They also pay a dividend, which is what I mostly aim for in a company. And next on the list, we have Pepsico. You probably know them because they are the creator of Pepsi, but they also have quite a bit of other consumer-based products that make them a really, really good company because they are really diversified. And as you can see, over the 5-year period, the price of the share was pretty stable, not really growing that much until maybe the beginning of 2019, where the stock price actually went up quite a bit, 40%, in about a year or so, and then with the coronavirus crash, they dropped down to where they were actually in all these years before that. So that's when I bought the first shares of PepsiCo, and right now I bought again because the price is not that expensive actually right now. So yeah, they also pay a great dividend that's better in my opinion than Coca-Cola, which is a really similar company if you think about it. So I prefer PepsiCo than Coca-Cola, and they actually paid the dividend for more than 25 years plus, and they actually increase it every single year. So a really strong company, and I believe they'll do great in the future because consumer-based products have a lot of ways to increase their revenue into the future. Next on the list, we have 3M. 3M, I wanted to own this company for quite a while right now, but when I started, the price was actually a little bit too expensive for me. And when the coronavirus crash actually happened here, you can see they had a bit of drop, about 25 or more 27% drop, and I bought them actually right here. So I bought them at a pretty fair price. I like 3M a lot because it's one of the rare dividend king. They paid that dividend for more than 50 years or plus, and they actually increased it just as PepsiCo every single year. And paired with 3M, I actually purchased J&J, which is Johnson & Johnson. And as you can see on the graph, they also have a pretty steady growth. And they had a huge drop in the last month or so because of the coronavirus. But what happened is that I was not planning on buying J&J at this time, so I didn't have, and actually missed the opportunity to buy some J&J shares at this point in time. But look at that. I actually bought them right here, and I believe that J&J is an absolutely great company because just like 3M, they are dividend king. They paid the dividend for more than 50 years. They increase it every single year. So this is what I bought for this, and this is what I bought for this month. Now, what would be the next plan for next month? Actually, I did something that I'm not sure I really like, but it was just a try. I actually bought 2 shares of Apple this month that I didn't include into this because I don't want to invest into Apple right now because I believe the price of the share is actually really expensive, and that's not really worth it, taking more risk. For only 2 shares, I think it was like $360 something, so pretty expensive. But I just did it because in the short term I knew that they had a presentation and that they were gonna announce iOS 14 and a lot of other features, which make them actually a little bit more valuable than where they are right now. I'm gonna sell them pretty soon just because I wanted to have some short-term profit, which I don't recommend you guys do. This is when most people lose money, is when they do some short-term trading. And I start actually to look at growth companies because as good as dividend companies are, it's a really long-term view on investment. And I actually want to start a little bit to see some growth into my portfolio, more into the value than into the dividend payments, because yeah, that's just interesting, I guess. And in 3 years, actually, Tesla will speak about the balance sheet for Q2. And as you probably know, it's gonna be bad. It's gonna be bad because they had to close some factories in California and also the biggest one in China. So they will have a big loss into Q2, which will make, in my opinion, the price of Tesla go down quite a bit. I'm maybe gonna sell those shares of Apple to buy some more Tesla when the price will go down. I'm gonna try this. You know what? I wanna try some growth companies, and Tesla is one of them. They don't pay any dividend. Actually, Apple pays 1.09% dividend, which is nothing for my dividend portfolio. I aim for between 4 to 5%, so that's really low. But yeah, I'm gonna look at Tesla a little bit more, and maybe I'm gonna try to invest a little bit into them. If you're interested into the content of this channel, you can actually subscribe so you don't miss out on any content that's coming soon. And actually go check out this video if you're interested. That's how to start investing for beginners. And I'll see you guys next week for another video. Bye bye.